Hello, everybody, and welcome to the 73rd edition of LM's Weekly Wrap, our weekly program relating to the market related developments. It's been a kind of a busy week. We've come to the end of the earnings season. It's been the end of the festival season, but of course, the start of the new wedding season going forward, and also, of course, the preparation for the year end. There are, of course, a lot of festivities which tend to take place towards the end of the year. So, a lot of exciting developments as far as the domestic economy is concerned. And during the week, we've seen some subdued developments in the global markets also. To take us ahead with respect to both these markets, we have with us Jash. Jash, welcome to the show, and kindly take us ahead on the market related developments.
Thank you so much, sir. It's great to be back, and I'll be starting with the Nifty levels. The Nifty has been, I would say, strong. It has had a good pullback rally in the last week. It has continued this week, but we are seeing a sideways movement in the last 2 to 3 trading sessions. I feel we should hold on to it, keep booking profits because if we book profits, we'll be able to buy stocks at a lower level. But I think the market has gone into selective mode. Sector rotation has started. We've been seeing different sectors performing well in different weeks. So think the theme remains the same. The theme will be discussed by Nirav sir. I'll be speaking on the broader markets. Coming to the global market, we've seen crude going off the highs. It went down below $80 and it has back to 82, $81 right now a barrel. And dollar index has also come off the highs and it has come down. So the emerging markets, if we see, there is a good rally in the emerging markets because of the same. Metals have been performing well. Mining stocks have been performing well. Also, what we are seeing is we are seeing banks being slightly hammered because of the global interest rates going high, as well as that is what is causing pressure on the Indian markets as well. If we go to see the Turkish bank increased their rates by 5%, that is 500 basis points in the last few days. That has led to a staggering 40% interest rate in Turkey. So that is something that the Turkish government should be worried about, and I think the inflation is very high over there, and let's see how they control the inflation. And coming to the Indian markets, as Niro sir rightly said that the festive season has ended, so has the earnings season. We saw a good amount of sales in the festive season. There was a massive consumption, and coming to the wedding season, at the start of the wedding season, if we see yesterday, or I think the 22nd or the 23rd of November, there were about 25 to 35,000 weddings in a single day in Delhi. So that marks the beginning of the wedding season. From certain statistics, we read that about 4.75 lakh crore rupees is going to be spent in this wedding season. From that, 1.25 lakh crore alone being from Delhi. We are seeing massive spending, and this is a circle of economy. All the sectors benefit from this. Another interesting segment is out of the 4.75 lakh crore, 15% is going to be is generally spent on jewelry. So you can do the math and see how benefiting the jewelry sector is going to be. And from that 15%, from the whole jewelry market, about 35% is organized side. So that's where the 35% money will be coming. So you go to see all the listed jewelry players. I think Niro sir will throw more light on that. I think that marks the end of my commentary, and I hand over to Niro sir to take it forward. Thank you.
Thank you, Josh. So, as rightly pointed out, that the jewelry market and the great Indian wedding extravaganza has begun, and in a way, there's been an end of a lot of other events, whether it is a festival season, that is the Diwali and all the related. What we have, the 32 days of festivals. Apart from that, we've seen the end of the earnings season also. We've seen the end of the World Cup also, Cricket World Cup also, albeit a little bit disappointing from the Indian perspective. But I think all these events tend to have a very huge multiplier effect on the economy, and they kind of boost consumption and sales in a very meaningful way. So looking going forward to the wedding season also has a tremendous multiplier effect. Of course, a lot of stakeholders involved in this, whether it is the jewelry or the decorators or the wedding planners or the pre-wedding shoots or the photographers and a whole host of banquets, etc., which are associated with this. So huge multiplier effect is expected in the economy, and that's how essentially the economies tend to run and function. We will also see an impact on the rural markets because during the marriage seasons or the wedding seasons, generally a lot of two-wheelers are bought and sold, and that is also being reflected in the two-wheeler sales. For example, in this week, some of the prominent gainers in the Nifty index were the two-wheeler stocks. So just we'll start off with sector-wise only so that we get more clarity on what developments have been taking place. First is the auto sector. I think the auto sector continues to do very well, and we've seen a very good impact in the passenger vehicle sales, the commercial vehicles doing very well on account of strong infrastructure activity. And this week, of course, was the turn of the two-wheelers. I think we have all the two-wheeler stocks which are just flying off the roof. We saw Hero MotoCorp, which is at a 33-month high. We have Bajaj Auto, which is at a record high. We've seen Eicher Motors on the back of very strong numbers and very strong commentary regarding the premium motorcycles. So the premiumization trend is also doing very well. The entry level segment bikes are also doing very well, and I think with the pickup in the rural economy, the two-wheeler story only is going to get better. We have TVS Motors, which is making an entry, a deeper inroads into the Asian markets. They are going to enter Vietnam in a big way. So a lot of developments have happened in the auto, and I think the auto continues to move from strength to strength. In the run-up to the assembly elections, I think markets are quite quiet at this point of time, and the only ray of hope, at least for the next 10 days till the time the results are announced on the 3rd, is going to be the performance of the auto sector, because auto has performed quite well, and it remains to be seen what is going to be the strategy now going forward in order to push the sales. So this is one. Second is the banking sector. I think the comments of the Reserve Bank of India governor with respect to the banks as well as the NBFCs, that they have to be very careful while lending, and they should avoid exuberance. They should concentrate more on the liability side. They should concentrate on the cost of funds. This is a warning sign in a way, that because banks have been this time the growth has been fueled by the high margin products, and a lot of products like credit cards, unsecured loans, personal loans have been pushed, and that is likely to impact the quality of the loan book. So in a way, a word of caution as far as banks are concerned, NBFCs are concerned, microfinance is concerned. As far as the NIMs are concerned, net interest margins, they've already peaked in Q4 of FY23. So I think going forward, the margin trajectory is going to be a tough road as far as banks are concerned. So we've seen a lot of banks, they've been under consistent pressure, and I think going forward too, we are going to see pressure as far as the banks are concerned, whether they are PSU banks or whether they are private sector banks or microfinance or NBFCs. I think there is going to be a pressure on the bottom line going forward. So word of caution over there. Third category is cement. I think cement continues to do very well. A lot of smaller companies which are acquisition targets are there in the limelight, whether it's the like of Orient Cement or Star Cement or Kesoram, which have been doing very well. So a lot of companies in the cement space are buzzing around in trade, and likely to see momentum over there. As far as the capital goods space is concerned, it continues to do very well. We have momentum across the board, whether it is railways or whether it is defense, etc. We've seen commentaries coming in from companies. They've been saying that there's been slight slowdown recently because of the assembly elections. But they are expecting that come January there's going to be a huge pickup in the infrastructure spending and activity. And generally, the 4-5 months prior to the elections is the period where you see very good spending and execution which happens in the economy. So I think the first 2 quarters of the next calendar year are going to be very strong as far as the infrastructure players are concerned. So this, I think, will augur well for steel, cement, and all the materials which are associated with the construction and the infrastructure side of the business. So I think that is something which we need to keep in our mind. FMCG continues to be a quiet sector, not much happening over there. It's waiting for recovery in the rural markets. Urban markets have been doing well. Premiumization agenda has been doing well, but I think it's the rural market which has been a weak spot as far as the FMCG companies are concerned. In pharma, trying to make a comeback, and our LM weekender stock idea which we have given, Cipla, I think the stock did move up very convincingly. It was up 8 to 9% from the recommendation price, but I think the US FDA action and the stock has again crashed to the recommendation levels. We've seen incidentally that a lot of pharma companies have come under pressure in trade yesterday. So I think a word of caution over there. I think need to be slightly cautious at these levels as far as the pharma sector is concerned, despite the fact that the performance of these pharma companies has been quite good in the last quarter. And finally, coming to the IT sector, I think IT sector is a sector which is still reeling under pressure. We are expecting a lot of challenges as far as the global markets are concerned. I think the order book has been going slow and the execution has been going a bit slow. So I think overall, just to sum up, we are seeing a lot of action as far as the beaten down stocks are concerned. We are seeing a lot of PSU stocks doing all kinds of movement in the trade. And what we had pointed out earlier also, that there is a lot of under ownership in these stocks. These stocks are under owned, and as a result of which one factor is that these stocks have started moving up in a very swift manner. And I think the investor interest is also there in these stocks. But overall, I think we advise that investors should be cautious, and they should concentrate only on good quality stocks. Case in point could be our Diwali picks, which have done quite well. I think one is Moil, which we had recommended at 237, which achieved its target in a matter of just 14-15 days, and the stock hit 318 before settling down at near 300 levels. Other stocks in the Diwali pack continue to do very well, whether it is JSW Infrastructure, Geo Financial Services, IEX, which has also been in the limelight, LT Foods, Sri Renuka Sugar. So I think one can definitely have a look at all these stocks as well as our weekender stock ideas. A lot of things to discuss, but I think we'll restrict our conversation for this part only. And for the concluding remarks, I hand over to Jash.
Thank you so much, sir. Thank you for the insightful session. And please like, share, and subscribe. We'll see you next week. Thank you.
Thank you.